Advancing stocks outstrip decline as midcaps rally after Trump moves to ease auto and agri tariffs. Metals and oil marketers are the big gainers.
RBI's decision to do $10 billion buy-sell swaps has pushed down forward rates for the dollar rupee by 20 basis points. Dealers say that this will incentivize Indian companies to take more forex loans, which can reduce the capital account deficit caused by the FPI outflows. Along with the 1 trillion rupees of bond purchases that the RBI has promised to do, liquidity is expected to improve substantially for banks and NBFCs.
Brent and WTI crude slide to 3-year lows on high US inventories and expected increase in output by OPEC Plus in April, slowing global growth and also raising concern on demand. Stocks of oil users rally.
The US has sought zero import duties on almost all products, barring agricultural produce in trade talks with India. CNBC-TV18 has learned the Trump administration is also unlikely to ease back on reciprocal tariffs.
Tesla has signed up its first showroom in Mumbai, paving the way for its India entry. But India Inc. isn't overly perturbed. JSW Group's Sajan Jindal says it'll be tough for Tesla to compete with homegrown brands. You're watching us here on Halftime Report. It's been a very interesting trading session so far. The Nifty opened higher. Thereafter, there was a dip. That dip has been bought into. Now we're at 22,400. What this buying of dip does is gives Street the reassurance that lower levels are protected, and that gives them the reassurance to go ahead and bid for mid and smaller caps, and as a result of which, the market breadth looking a lot better. I'm Mangalam Malu, with me Hormas Vatakia. Over the next 2.5 to 3 hours, we will have expiry, weekly options expiry playing out as well. Hi, Hormas.
Hi, Mangalam. Man, indeed, it's been a choppy start, if you could say that. But right now, the screen looks positive as of now. 22,400 is where the Nifty is, still 100 points off the highs of the day, which is around about 22,500 levels. And that was supposed to be a bit of a concession zone, that 22,450, 22,500 levels. The broader markets, of course, the weekly options expiry today as well. So seeing some bit of volatility with that as well. The broader markets, well, fairly okay. They too are off the opening highs. The mid-cap index is up around 0.4%. The small-cap index too opened higher, then gave up some of those gains, and now is oscillating between gains and losses as well, doing fairly better than the mid-cap index, at least 1% higher there. But a lot of these oil marketing companies are doing well for themselves. Chennai Petro is up 10% now as we speak, the second best performer on the Nifty 500. And of course, the usual suspects among the oil marketing companies, HPCL, BPCL, Indian Oil, all of them doing well after crude prices fell to a 6-month low, and on an intraday basis even fell to a 3-year low. So positives coming in for the downstream oil refiners. But in our value plus segment, we've been focusing on this consumption theme quite a bit. And one of those stocks that's doing really well for itself today is Sapphire Foods. And Mangalam, you will tell us why.
Well, you know, we've been talking about how quick service restaurants may perhaps have turned a corner. Seems like it, because Sapphire Foods, the one which was, trading at the biggest discount to its peers, has actually seen a bit of an up move today, up 9%. For the last few trading sessions has been doing well. I was looking at the exchanges. They have a couple of analyst meets scheduled. They have a meeting tomorrow with the management of, the analysts at Motilal Oswal, and thereafter on March 10th, they have Sundaram Alternate as well, the analyst of which the company is meeting. So we will try to, see some brokerage notes emanating from the meeting with Motilal Oswal, and perhaps we'll keep an eye out on what happens with Sundaram Alternate as well. But short point is that trends are reversing. If you look at it, in the third quarter as well, the decline in SSSG for KFC was arrested from 368 on the negative side. It moved to about -3 in the third quarter itself. Look at Pizza. Pizza's done a lot better after many quarters of a decline in SSSG. In the third quarter itself, same-store sales growth improved. And add to that, we had, the analyst at Goldman Sachs join us on his note, Arnab Mitra, who did say that the tide is turning for India QSR. And in that, his top pick was Sapphire. They prefer Sapphire and Devyani as they like long-term structural opportunity in KFC. They believe that, the several value offerings that these companies have made will hold them in good stead. I was looking at all the analyst calls as well. This is from Bloomberg, where 79% of the analysts on Sapphire Foods too have an average target price of 370 with a buy call. All the others who are bullish on this space are decreasingly so for Devyani, Jubilant and Westlife, but that's largely because of valuation-related concerns. So there are offers in terms of valuation for Sapphire Foods as well, in terms of support coming in. And the final thing that we'll be tracking in Sapphire, and this is something that keeps going on every once a while. This is any sort of merger buzz around consolidation of Yum Brands franchises in India. Is that likely to happen? Not in the near future. Does the rumor continue? Always. Is that buzz which always takes place? Well, this happens every time, you hear a big move on Sapphire. So just wanted to put all things into perspective when we're tracking the move that we're seeing on Sapphire Foods. We're meeting analysts. Recently, the business turned a corner. Analysts are positive on the company. And at the same time, there's always that buzz on, the impending merger between the Yum franchises.
Bucket full of gains, box full of gains, you may call it as you please, but the screen showing a 9% up move there for Sapphire Foods. A very good day at the office, 6% higher in the last month as well. You would take that on a time when the broader markets have been down anywhere 10 to 15% over the last 1 month. But staying with Mangalam, because he'll be talking more about Adani Wilmar on our Insight Edge segment, and that is on the back of their latest acquisition, Mangalam. Yes, we spoke with the management today. It was, an insightful conversation, and hence we call this Insight Edge. The acquired business that they acquired, in FY24 did about 400 crores of revenue. So the management did say that once with their scale, their distribution, they can scale this higher, and the 400 crore last year can actually turn into 1,000 crore in the next 3 to 4 years from now. And more importantly, it won't only be, revenue synergies, there will be cost synergies as well. Adani Wilmar has said that the business, which currently does about 8% margins, can actually see about 300 to 400 basis points improvement basis their sourcing capabilities and cost cuts, etc. And the biggest overhang on this would be that they've acquired 80% stake at an enterprise value of 600 crores. Would they have to pay a lot more to acquire the remaining 20%? To that, the management said the upside is capped. Just to put things into perspective, a 400 crore business acquired at an EV of 600 crores, you're paying about 1.5, 2 times EV to sales. If this business does about 2,000 crores in 1,000 crores in sales as managed, as guided for by the management, then the enterprise value of this business becomes anywhere between 1,500 to 2,000 crores. So for the remaining 20%, chances are that they may have to pay anywhere around 300 to 400 crores, which is roughly 50% of what they've paid for 80% of the entire business. To that, the main allaying of concern was that the upside is capped. At what price? They did not disclose, but that's an important, important data point that came out from the conversation with the management. And finally, what about the Adani Wilmar deal, where Adanis will sell their 40% stake in the company to Wilmar? They are awaiting CCI approval, and that may happen soon as well. So those are a couple of insights that we got from the conversation that we had with the management today. In fact, we spoke to the management. Let's listen into what they had to say on this as well.
We always felt that we need a basket of products which is value added and goes well with the kitchen essentials that we generally call them. Now, when you look at the turnover today, it's around 400 crores, but considering our strengths in terms of distribution reach, in terms of our capability of providing expertise in easy manufacturing, as we have that expertise, turnover-wise, we see in the next 3 to 4 years 1,000 crore turnover. See, from 8% margin, we expect at least 3-4% increase surely in the next couple of years. And because we will have to invest in advertising and brand building and promotions more aggressively. And there we see some amount of expenses. And as far as the valuation for the next 20% is concerned, that we have agreed within us, this is the performance of the company. Not sure when, but surely it should happen soon. Not exactly, I know the dates right now, but then it should happen soon.
Some concerns as well, the management answering those, but not a significant reaction there in the stock price despite this big acquisition announcement. And moving on then, from breaking barriers to rewriting the rules, our exclusive Future Female Forward Mega Summit brings together the voices that matter. Don't miss this power-packed conversation on enabling success, driving parity and shaping a more inclusive future. Tune in to CNBC-TV18 on the 10th of March starting 5:30 p.m. Take a short break, back on the other side. Welcome back. Still holding on to gains of around 70 points on the index. 22,400 is where the Nifty is. But the star of the day so far has been Castrol. 11% higher now on the stock. The top performer on the Nifty 500. Some progress or some reports suggesting some progress on the sale of British Petroleum's lubricant business, which belongs to the Castrol entity. But the government of India granted a Navratna status to IRFC a couple of days back, and my colleague Abhimanyu caught up with the management, its chairman and managing director Manoj Kumar Dubey, to understand the growth aspects. And now, what does this achievement mean for the company? Listen in.
Day before yesterday, Honorable Railway Minister announced this Navratna status for my company, IRFC, and as well as my sibling, IRCTC. It's a milestone in the journey of this company. With this, we do get some autonomy to the board to take decisions in a faster manner. And at the same time, this has coincided with our diversification plan of the company, where we now intend to fund not only directly to Indian Railways, but also to the railway ecosystem, whatever coming in terms of PPP or in terms of the projects which are going to serve to the Indian Railways. For example, in the last 2 months, we have won 2 RFPs of 3,200 crore and 7,500 crore with NTPC. One in Jharkhand, one with NTPC Renew. Going forward, any backward-forward linkage projects with the Indian Railways, we intend to have a good look, and we intend that these kind of projects will be funded by us, where we get better margin also.
Will this lead to better NIMs, better yields? What kind of prospects do you see for your company going ahead as far as further collaborations, even with the private sector, is concerned?
So there are 2 positive aspects for this company. One, since we are funding to Indian Railways, our margins were fixed with them. That was 35 bps for projects and 40 bps for rolling stocks. Now, when we go and fund to any of the projects through RFP in the railway ecosystem also, we have inherent strength in the fact that my overhead cost is very low, and we have got access to very cheap funds. And we, because we are used to fund at 40 bps margin, so any margin more than that, 2x, 3x is very good for us. So we are very competitive, and it is proved for the fact that the 2 RFP that we participated, we became lowest. And I believe that for the railway ecosystem projects, this trend will continue. Second thing, we don't have exposure to any other entity other than the railways. So we don't have any limitations like others. So any entity which is having any kind of link with the railways, we feel that we have got a good look and good chances of getting an opportunity to fund them. And any funding to them will bring in better NIM to us, because it is more than 40 bps for me.
Do you expect some degree of relaxation as far as liabilities are concerned with this development, with more funds available? And also, you spoke about deployment of money, deployment of capital in the renewable energy sector, and also with the private sector. Can you shed some light on those plans?
You see, my limitation right now, or my focus right now, is on renewable assets which are going to cater to Indian Railways. Having said that, there are requirement of nearly 8 gigawatt of renewable energy to the railway by 2030 to make it clean, carbon-free. For that, nearly 30 gigawatt of establishment has to be done in terms of solar and wind or mix. As you know, but typically 4 to 5 crores are needed for 1 megawatt of setup of wind or solar energy. So it's a huge market available. Towards that, only the first thing we did that with NTPC Renew, we won 7,500. And I believe that next 4 or 5 years, since, you know, country as well as Indian Railways are gearing to be carbon free, and we want to be a country where renewable mix should be higher. So this is one of the biggest business on the platter, limiting the railway itself, and I think a sizable amount of my asset will go to that line.
My final question to you, your competition efficiency, of course, is going to witness a huge boost with this conferment of Navratna status. Any plans to invest in sectors like tourism or any other associated or allied sectors with the railways to ensure better collaboration between government departments beyond railways, but especially the departments which are already with the government?
So you see, my mandate tells me that I can do anything backward forward. As you mentioned, tourism. So Indian Railways is an integral part of tourism. My sibling company, IRCTC is there. They are thriving, and they are trying to do so many things to bring in more and more facility for and appetite that the passengers have. So in fact, development of budget hotels are also in my purview. So tomorrow, IRCTC or any other entity who enters into an agreement with Indian Railways and try to develop these kind of things, in fact, as part of station development projects also. So they're all within my mandate, and any development within the railway ecosystem, including tourism, if it requires funding from outside, we will be the first to grab it and do it in a cheaper manner.
Right, with that, we'll take a short break. Come back on the other side. Aditya Agarwal of Invest for Edu will join in with some trading strategies as we move towards expiry. The Nifty holding on with gains of about 75 points. 23,400 is where we are. The Nifty Bank of highs. We're getting some ideas. Welcome back. You're watching us here on Halftime Report. The Nifty holding on just above that 22,400 mark. But, the story of the day will also tell you the range of the market right now and what the street is expecting from the lows of the day to the highs at the opening level itself. You have the Nifty high at 22,491 and the low today at 22,245. What does this imply? Not very different from the range that everyone was talking about, including us when we looked at, the morning data as well. 22,500 on the way up is a bit of a resistance. On the way down, 22,200 to 22,250 is likely to be a bit of a support. And as that happens, you see the broader markets outperform. The advanced decline charts tell you the story of the day. They are like parallel lines, parallel train lines. 2,100 stocks in the green for about 500 stocks in the red itself. So people tend to bid more on the broader markets when they believe that the levels at lower support at lower levels are intact. And it is Thursday. It's the weekly options expiry. So what do we pull out on weekly options expiry?
We do the iron condor.
The iron condor. But today we don't talk about the iron condor. We just talk about shorting a straddle. 23,350 was where a lot of action was. The 23,350 call had a premium of almost 50 odd rupees, though that's the different one that we've pulled that out. Sorry, 22,350 is the one that we're looking at. 22,350 call and the 22,350 put. So pull out both the 22,350 call and the 22,350 put, and you would see that option writers are expecting expiry range between 22,250 and 22,450. Beg your pardon, the range is 22,250 and 22,450, not 23,250 and 23,450. So we'll keep an eye out on that. A lot of stocks which are on our radar. Short covering seen on Asian Paints. So just watch for that one. And a lot of long positions added on names like Jindal Stainless and Apollo Tyres. Asian Paints has been a beaten down name, had been underperforming. Lower oil prices got the stock to be bid up, and as the stock was bid up, we saw some shorts cover their positions. Apollo Tyres and Jindal Stainless are the other ones where we're seeing some long positions being added. So short point 22,250 to 22,450 is the range that option writers are playing for by writing the 22,350 straddle.
22,350 straddle. You broke away from the usual trend this time around. But yes, the oil sensitives.
As did the market.
As did the market, indeed. As the oil sensitives are the ones that are outperforming in today's session. When was the last time we saw a move of 4% on Asian Paints, at least on the upside for that matter? But Aditya Agarwal of Invest for Edu is joining in now on the show. Aditya, good afternoon. Thank you for joining in. Well, 22,250 to 22,450, is that the range where you see the expiry as well? What's the road ahead for the Nifty, and couple that up with your stock recommendations as well for the afternoon?
Hi, good afternoon, Harbers. Good afternoon, Mangalam. And absolutely, I would agree with Mangalam that Nifty has also broken away from its usual trend of correcting. Finally, back-to-back 2 days, we are witnessing good up move on the Nifty. I think markets could surprise you on the upside by breaking out of that high of today, which is 22,490 to about 22,500 zone. I think because the first leg of sell-off was bought into quickly, and if you take a look at the broader markets, which Mangalam was talking about, they're participating big time now. And I think so the rally might just trickle into the large caps in the later half of the trading session. And I'm going to be surprised if market actually closes somewhere around 22,500 or maybe slightly just between 22,450 to about 22,500. With that, I think Bank Nifty has to play a major role. 49,000 on the upside is acting as a major hurdle on the Bank Nifty. If Bank Nifty manages to trade somewhere around 49,000 or maybe just above 48,600 or 700, then I think so Nifty too will scale closer to 22,500. So keep a close eye on the bank Nifty. If you see any kind of short covering rally on the bank Nifty above 48,600, 48,700, then I think your other large cap stocks too will chip in, and Nifty could just surpass that resistance of 22,500 on the upside towards the fag end of the trading session in today.
What about individual stocks? Are you playing more on the long side?
Oh, absolutely, Mangalam. Both these stocks I'm playing on the long side. In fact, one is Asian Paints, which we were just talking about at the start of the show. And I think so it's extremely beaten down, as you mentioned. Risk to reward is in favor of going long at current levels. I see massive upside in the stock, but I'm just playing for a target of 24.50 at the moment. So at current levels, I'll be a buyer in the stock for a target of 24.50 on the upside. Place a stop loss just around 21.50 on the downside. So the risk to reward is an excellent and favoring the bulls at the moment. The second stock on my radar is Coal India. This too, after significant correction, has taken support at 61.8% Fibonacci retracement level. From there, stock is inching higher. So at current levels, I'll be a buyer in Coal India for a target of 410 on the upside. Place the stop loss somewhere around 365 on the downside.
What about Castrol, Aditya? Very quickly, if you could share your views on that. It was a very interesting move. It went up to 280, retraced back to 160, now back to 250. What are the charts saying here?
Oh, very good move. In fact, today's 11.5%, 12% move on the stock, backed by excellent volumes. I think there is more room on the upside. If you already own the stock, just continue to hold. If you're looking at fresh entry, maybe wait for an intraday dip of 5 to 10 rupees, and you can again enter the stock with the stop loss just around 220 on the upside. I think so the previous peak of 280 is likely to be taken out in the near term. So just continue to hold, buy as well, maybe on a marginal profit taking on an intraday basis of 5 to 10 rupees, and look for a target of at least 320 on the upside. This will be more of a positional trade almost, and I think so looking at the chart setup, definitely this is coming in the next few months maybe.
Oh, 320, a positional target. Aditya, thanks a lot for joining in, sharing your views on the index, stocks, and of course the stock of the day possibly, which is Castrol. Thank you for joining in. But we take a short break. But before we do that, here's some good news for our viewers, as India's business news leader is now just a click away. The all-new CNBC-TV18 app, which gives you instant access to breaking news, in-depth articles, and financial world updates right at your fingertips. You can download the app from the Apple Store or the Google Play Store, or scan the QR code that's on your screen. We take a short break. We'll be back on the other side with more. Stay tuned. Welcome back, and some interesting notes that have come in on the markets as a whole, with brokerages, especially the foreign brokerages, turning constructive on Indian equities. And Jefferies is one of them. Earlier this morning, they came out with a note saying that India's relative valuation now, after the correction that the Nifty has had, is at its 10-year average compared to the MSCI Emerging Market Index. And historically, from these levels, the markets have generally seen a bounce both in absolute terms as well as in relative terms, is what Jefferies is saying in their note. And they also speak of FPI flows that have been on the red side for a better part of this year, actually for most of this year so far. And they also said that too may turn because the dollar has corrected almost 4% from its peak. So that may result in a reversal in FPI flows, because the FPI positioning by emerging market funds for India is at a decadal low, is what Jefferies has written in its note. Additionally, the uptick seen in the economy, the easing liquidity situation, all of this can combine for a near-term bounce on the index, is what Jefferies wrote in its note. Who's also turned constructive though is BofA Securities, and they say that the Nifty is now at its long-term average valuation, similar to what Jefferies mentioned. They have a 25,000 target on the Nifty by the end of the year, which is around about a 14% upside from these levels. However, they are bearish or they continue to remain bearish on the small caps and the mid caps. And based on this, they have come out with a recommendation list of 12 stocks which have a potential upside of anywhere between 10% to 40%. And most of these names are Nifty constituents, be it the likes of HDFC Life, L&T, M&M, Titan, Bharti Airtel, Infosys, ICICI Bank, Eicher Motors, Bajaj Finance, Shriram Finance, and the only non-Nifty name that they have in this list is Divi's Laboratories, and that is where they see close to 25 to 26% upside on these levels as well. And just as we say that the brokerages are turning constructive, the bulls are looking to turn constructive as well. The Nifty is now up almost 100 points as we speak. 22,430 is where the index currently is.
And the largest contributor to that is, guess what? It is Reliance. After a very long time, we've seen Reliance move up in today's trading session. If you just pull up the contribution chart, you would see that the up move that has come by on the market has been on account of Reliance closing in on that 1,200 rupee mark per share after having seen a correction of almost 6.5% in the last 1 month itself. So why is it that Reliance is moving higher? See, the Nifty is up 100 points, 33% of that, a third of today's gains are courtesy Reliance. It's on the back of multiple brokerage notes. What are those brokerage notes saying? Sudarshan joins in with the details. Sir.
So two positive brokerage notes have come in for Reliance Industries. One is from Kotak Institutional Equities, which sees an upside of nearly 16% from current levels, and Jefferies too has come out with a note and it sees an upside of more than 30% from current levels. Kotak Institutional Equities has upgraded the stock to buy and target is rupees 1,400 per share. It says after correction, risk reward now looks more favorable, and reasons for the recent underperformance given by both Kotak and Jefferies are the same, and those two reasons are first, subdued retail business performance, and second is weak refining outlook. And Kotak Institutional Equities has cut FY26-27 EBITDA estimate by 1 to 3%, but despite this cut, it expects earnings CAGR of 11% over FY24-27. So what are the key catalysts as per Kotak? It says retail business will likely improve in next few quarters. Second, Jio Platforms IPO timeline and likely another tariff hike will be two major key catalysts. Coming to Jefferies, it maintains buy call, and here target is 1,600 per share. It says pessimism looks extreme and current market cap implies $48 billion enterprise value for retail business versus $106 billion that company had seen in the last funding round. Also, reasons for underperformance, same, slowdown retail and subdued O2C earnings. As per Jefferies, key catalyst would be store sales growth and area addition should restore 15% growth for retail business in FY26. And Jefferies says tariff hike and likely listing of Jio and also improvement in O2C business will be key catalyst going forward. So positive note coming from from Jefferies and Kotak Institutional Equities, and that's the reason you're seeing an uptick in the stock. It's up currently 2%.
All right, we take that point. Thank you so much, Sudarshan. That explains why Reliance is up 2%. We take a short break, come back, focus on the markets itself. It's essentially that the Nifty is hit once again from the lows. It's a much smarter recovery, nearly 200 points. The Nifty bank is underperforming, but we're still seeing gains in the broader market. So we'll keep an eye out on all the market action just after this short break. As you can see, it is a screen full of bright green. The market's building on its gains right now. As we speak, 22,450 is up on the Nifty right now, and it's led by non-Nifty bank names. So if you look at, some of the key contributors on the way up, we spoke about Reliance just before going into break. Just pull up the intraday chart of HUL. That stock has moved to the high point of trade. Over the last couple of trading sessions, we've been seeing some bit of volatility in the consumer names, but now during midday, HUL has picked some pace, currently doing well. We're also seeing traction on a lot of these PSU/infra names. So from the PSU end, we have Coal India, which has done well. Coal India actually has negated all its losses in the earlier 3 days of the week, currently at the high point. BPCL, all these, oil marketing companies have been doing well because of lower crude prices, which now actually stand sub $70 per barrel. NTPC is picking pace, and some gains seen on a couple of these pharma names like Dr. Reddy's and Sun Pharma as well. What's not doing well, however, we have a couple of these IT names which are seeing some profit taking. So Tech Mahindra comes up for you, the top Nifty loser right now. And we have Maruti, which is not doing too well too. From the broader markets, it's the metals all over. Vedanta is up nearly 3.5%. And remember, we spoke about how Jindal Stainless was seeing some fresh longs. From there itself, it's extended its gains. It's up about 6.5% on Jindal Stainless. What we'll do is, for metals, oil and all things commodities, take this short break, come back on the other side. Manisha Gupta joins in.
Welcome back, and let's go across to Anandya Banerjee of Kotak Securities, who joins in with a sense on commodities. Now, Anandya, hi, thank you for joining in. And the first conversation clearly has to be on metals. With the way we've seen prices rise for the last couple of sessions, what would you say? Is it more to do with fear, or would you say that the demand seems to be improving as well?
Yeah, thank you for having me, Manisha, and a very good afternoon. Yes, metals have been rising on the back of hopes that China will be able to push through more stimulus. And the weak dollar is definitely helping, because the way the dollar index has fallen over the past 1 week, and it is simply not stopping, that is also contributing to what we are seeing in copper, zinc, and aluminium.
But Anandya, would you call it a weekly phenomena, the way we've seen it happen in last couple of sessions, or do you think the tables have turned, or would you still say it's going to be cautious, depending on the kind of statements we hear from US or China for that matter?
Sure. See, copper has a strong tailwind because in the LME, we are seeing a strong rise in the cancel warrants. So copper prices can rise towards $10,000, and that's around, let's say, 900 rupees on the MCX. Aluminium has a tailwind because we are seeing consistent decline in the LME inventory. But zinc could be more range bound. So yes, copper, aluminium could continue to rise. Some positive news from China would be helpful, and of course, a weaker dollar. But zinc may find it difficult to climb much.
So, I've been reading a few reports, Anandya, and many of them suggest that the next 2 to 3 months can be quite bullish. And the reports do suggest that 8 to 10% of a rise in many of these metals that you mentioned could be seen therein. Are you equally bullish, and for that time frame?
Yes, over the next 1-2 months, yes. But we have to keep one thing in mind, Manisha, that the trade war between China and America is going to intensify. That was our house view since end of last year, since the US elections. And we expect the trade war to escalate significantly in the coming days, because the America First policy of Donald Trump is basically puts it at a clashing point with China. So that can become a negative factor from time to time for commodities. But as of now, next 1-2 months, it looks bullish.
Anandya, also come in on steel, because China has spoken about steel restructuring. And while they have been talking about cutting steel output for many years now, 1 billion tons is what they've been producing for the last 3 years. 50 million tons of an output cut is what they're talking about. How does that impact prices?
See, the steel is completely dependent on China, absolutely. But as I said, right now the sentiment is positive across metals. So steel prices can see some upside. But once the next leg of trade war picks up, which I think is going to happen in a couple of months' time between China and America, that could be the time when the metal, including steel, can come under pressure.
All right. Let's also talk about the crude oil prices, because that clearly has been a joyous decline for the Indian markets, because the way we've seen many of those companies react, whether it has been about OMCs or paint companies. But the kind of decline that crude prices have seen, 7% of a decline in last 1 week, which is 6 or 7 trading sessions. How would you look at these current prices? And are you also looking at further decline from here on?
Yeah, we have been structurally bearish on crude for the simple reason that we are seeing the demand picture is simply not picking up. No matter how much the OPEC continues to put out very rosy projections, those numbers are simply not met. And at the same time, there is clear emphasis on increasing supply, be it from US, be it from OPEC. So the overall picture in crude is negative, but the only supportive factor at this point is geopolitics, because Ukraine theater is closing, it seems like, but at the same time, the Iran and Israel thing is not yet concluded. So that can come and bite the markets. But otherwise, the overall story on crude is downward. It looks a bit oversold in the near term because $65 in the past 3.5 years has always been the floor, and we have seen the prices bounce back in WTI back to $70. So maybe some technical bounce over the near term, but we expect prices to finally head lower towards $60 in the coming months.
And then also, how would you look at the precious metals then? And while we have seen a good safe haven buying come in for gold prices in much of second half of 2024-25, absolutely. At these current levels, the rally does seem a bit tiring. We haven't, while there has been a conversation about $3,000, it doesn't really seem to be getting there.
Yeah, exactly. Because for gold, if you look at the COMEX positioning of speculators, it's at a record high. So that is what is stopping the gold prices from climbing. Because if everybody is bullish, it becomes difficult for the market, no matter how much strong the overall fundamental theme is, to push higher. So around, let's say, 29, 40, 50 levels, the spot gold is getting stuck. So we could actually see silver prices now catch up to gold. We have seen that happen over the past one trading session. So we could actually see silver catch up and move higher. So if I have to bet between gold and silver, I would rather bet on silver and expect it to move towards $33.50, eventually towards $35. As gold, basically, it moves up, but it moves up in a slower manner.
Oh, well, absolutely. Silver really seems to be outperforming at this point in time. It actually is between silver and copper on how we stand year to date in sense of many of these commodities, between 14 to 16% of gains coming in for both of these commodities. And as Anindya says, it's a buy call across commodities, at least for next couple of months, and absolutely for silver there. Anindya, thank you so much for joining in with your sense on all of those commodities. With that, we go for a break. But on the other side, Business Lunch will take all the action forward.